Let's be real. Your car is probably one of the biggest drains on your wallet. But what if I told you that very same car could actually save you a ton of money on your taxes? In this explainer, we're going to lay out the roadmap for turning that major expense into a powerful tax deduction. You know the feeling. You've got the car payment, the gas, the insurance, and then bam, a surprise repair bill hits. It can seriously feel like you're just throwing cash into a giant black hole, right? It's a feeling just about every car owner knows all too well.
But it really doesn't have to be just an expense. Believe it or not, the tax code is filled with ways to help you get some of that money back. The trick is just knowing where to look and how to take advantage of them.
So here's the roadmap we're going to follow. We'll start with something almost any driver can do, then we'll get into savings for all you eco-friendly and business drivers. After that, we'll cover a really specific category for certain employees, and we'll wrap it all up with the one rule you absolutely have to follow.
Okay, let's dive right into our first strategy. If you've got an old car that's kind of on its last legs, your first thought might be to sell it for a few $100. But hold on, you might be leaving a lot of money on the table.
Donating it is actually way easier than you might think. You just pick a charity you like, set up a time for them to come get it. Yeah, a lot of them will pick it up for free, and then they give you a receipt. That little piece of paper lets you deduct the car's fair market value, which can often give you a much bigger tax break than the cash you'd get from a scrapyard.
All right, shifting gears now. Let's talk about how driving an eco-friendly car can unlock some of the biggest tax savings out there.
Okay, look at that number, $7,500. That's the magic number. If you buy a brand new, qualified electric vehicle, you could get a federal tax credit for up to that amount. It's a massive incentive to go green, but, and this is a big but, there are some serious strings attached.
And here's the reality check. You've got to clear a few major hurdles to get this credit. First, your income can't be too high. The car itself has to meet certain rules. And this last one is a huge deal. If you bought your car after April 18, 2023, it has to follow some really strict rules about where its battery parts and minerals come from.
Now, here's a term you've got to understand. Non-refundable. Think of it this way. It's not cash in your pocket. It's like a coupon that can slash your tax bill all the way down to zero. But to get the full $7.5 grand benefit, you have to actually owe at least that much in taxes to begin with.
All right, this next section is an absolute game changer. So listen up, all you freelancers, small business owners, and gig workers out there who use your personal car for work. This one's for you. And wow, look at this list. So many of your everyday car expenses can become deductions. We're talking a portion of your gas, your oil changes, insurance, registration fees, even the interest on your car loan. It all adds up fast.
Okay, here's a small but really important difference you need to know. A simple repair, like getting new brakes, can be deducted in the same year you pay for it. But a huge overhaul, like totally rebuilding the engine, well, the IRS sees that as a long-term improvement, so you have to spread that deduction out over several years.
Now we're getting into a really specific category that, honestly, most people have no idea even exists. This isn't for the self-employed, but for a very specific group of employees who get a W-2.
And when I say specific, I mean really specific. You pretty much have to fall into one of these exact roles to qualify. For most other W-2 employees, unfortunately, the ability to deduct work-related car expenses that your boss doesn't pay you back for, that went away a few years ago.
So here is the absolute key point. This is not for double dipping. If your employer already paid you back for your mileage or bought you gas, you can't then turn around and deduct it again on your taxes. This is only for costs that came directly out of your own pocket.
So we've covered a bunch of different ways you can save money, right? From donating your car to business use. But let me tell you, none of them, not a single one, will work without this one fundamental thing.
And there it is. This is the golden rule, folks. Records. Meticulous records. Whether you're deducting mileage for your side hustle or for your duties as an armed forces reservist, if you can't prove it, you can't deduct it. The IRS is not a fan of guesswork.
So what does meticulous actually look like? It means for every single business trip, you need to log these 4 things: the mileage, the date, where you went, and, this is the most important part, the business reason for the trip. Honestly, a simple notebook or a mileage tracking app on your phone makes this super easy to do.
And of course, look, we've given you the roadmap, but tax laws can be tricky, and your personal situation is unique. So please, do yourself a huge favor and talk to a qualified tax pro.
They're like the best co-pilot you can have to make sure you're getting every deduction you deserve the right way.
So, there you have it, a clear path to turning one of your biggest expenses into some serious savings. The only question left is, which of these tax-saving lanes are you going to jump into this year?